Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday ETF report, May 9th already, 2026. And remember, folks, if you want to walk on this beach like Jimmy Buffett used to do at sunrise, then you've got to learn how to invest even better than Warren Buffett does now. And let us look at the QQQs, and this is over 6 months, and you can see on the QQQs, NASDAQ 100 is the index that is just surpassing everybody, and just look at this rise off the bottom in here. But remember, this is over 6 months, and it just started a couple of months ago, well, 4 months ago now, going on 5. And let us look at the year to date also. And same thing, we have this wonderful, wonderful rise in here, topping over here, right up against that top. All indicators, and I'm talking about moving averages in here, pointing up, and our intermediate term indicator is pointing up nicely, still pointing up. And so we're looking at a very, very good run with this market here. And of course, they expect better things coming out of the Middle East, and the earnings are coming in something like 20% above last year. So the economy is looking good. The jobs numbers just came out, and they're looking very, very good. More jobs were created than were expected by more than double. And so everybody's happy right now. And let us look at the S&P 500, because the S&P 500 is doing the same thing. The only problem is that the S&P 500 is only up half as much as the QQQs. Let's go back to them right there. So the QQQs, the NASDAQ 100, is doing twice as well as the S&P 500. So you can see that the money is going into the tech and the semiconductors and all those stocks out there that we all have loved over the past 7 or 8 years in real portfolios. And we have loved before that when we back tested and said, wow, these are the stocks to be in. And we're going over Kathy Woods again and her innovation type of mutual funds that she runs. And we went over that last week, but we're going to add a little bit to it this week. Okay, so let's see what the indices did this week, just this past week, and look at the top. The semiconductors are up 8.2%, and technology up 6.6%. The NASDAQ itself up 4%, 4.23%. Then comes gold and the S&P. Even the S&P was up 2%. Look all the way down here. Yeah, oil, energy and oil just took it on the chin this week, but they're doing pretty well for the year. In fact, let's look at the year. And here are the ETFs over the year. And for the first time, the XSD, the semiconductor ETF, up 67.8%. Can you believe that, folks? And then comes oil and gas, and energy, which these two were at the top for the longest time, and along came semiconductors and creeping up, and technology right here just below energy. NASDAQ 100 up 14.5%, which we mentioned. Those are the QQQs. So doing very, very well. All the way down here, home construction, home builders are barely breaking even here. Home construction down 3.39%. And down here, healthcare down close to 7%. Financials are all the way down. That's because interest rates have been rising lately. And that's because oil has been going up. So the whole world is looking at, we could all be in a little bit of trouble here, recessionary talk going around, and that's why these are down this way and this far. So let's look at our technology ETF, and the technology ETF is up 20%, 20.5%, and our stocks, so this is not included, the XLK is not included in this average, but our stocks are up 30.6%. Now look at Palantir down here, negative 24%, but don't forget, it was up over 150% last year. So yeah, it's taken a little breather in here. And I just want to mention that when I first did my research, I held stocks for 4 years straight. And in some instances, that is very, very good. And the reason being is because you take a stock like Palantir that was up 150% last year, and now it's down 24%. Will that come back? Well, it takes time for the market to catch up to the earnings. They got, in other words, Palantir got so far ahead of itself, and it's still making fantastic money. It came out with the better than expectation earnings, but now it has to catch up. There was one point when Microsoft was between something like $34 to $39 a share for 5 years in a row until it got its act together. So that's how you have to look at some of these stocks. Even though they don't perform well, a lot of people want to kick them out of the portfolio right away. And a lot of technicians that I talk to say, no, you should have sold that stock. You should have sold it. Well, yeah, that would be nice. But look, it's coming back very, very strong the following year. So you never know about these. But if they're making money, then it's not a bad idea to hold on to them. Palantir's doing really, really well. And let us go to the semiconductors. And our semiconductor top stocks up 38%, folks, and that's just we're just in May here, so we've got a long way to go. But these stocks were up 50-60% the year before last, or was it 3 years ago? And so these stocks can really run when they start running. Look at AMD up over 100%. Manpower, monolithic, up 76% so far this year. And the XSD itself, the semiconductor ETF, is up more than our top stocks. You don't see that very much often, where a high-flying, really good performing ETF outperforms our own top stocks. But when you're looking at our top stocks at 38% up, and it's only May 9th, you got to say that still ain't too bad. So, and most of our top stocks actually really overpower the ETF itself. So this is an oddity in here, but it's a pretty good oddity. I certainly wouldn't kick it out of the portfolio or change the portfolio around just because the ETF itself is up more than our top stocks, when our top stocks are up 38% so far this year. And let us go to the home builders, because another not so good report came out on home building, home construction, just hours ago, just before I put this video together. And the housing ETF is up barely, a 0.1%, 0.16%. Our top stocks up 12.35%. So we're up almost double the S&P 500 with the stocks that are in an index that are doing absolutely nothing. And here's IBP, Installed Building. This stock was up over 50% last year. So it's a stock that's really doing well, has done well in the past. That's why it's in this portfolio. And right now it's down 15%. But our top stocks are up almost double the S&P 500 in an ETF that is kind of doing nothing in the doldrums for almost 2 years now. And this is the chart that I put in last year and the ARC, and that's the Kathy Woods Innovation ETF, and I wanted to show you the 5-year returns, where it was down 30%. S&P is up 82%. This is over 5 years. The Tech XLK, and that's the Tech ETF, up 132%. So we look at this and we look at the Tech ETF, and we're saying, well, maybe the Tech ETF is better than some of those smaller stocks that are in the ARKK, which is the Innovation ETF. And then our top stocks in the XLK are more than double the XLK itself. So here's where the top stocks come in, and they're doing very, very well. Now, I want to show you something. This is year to date, and the black line is the S&P 500, and these are all the ARK funds. So you have the Innovation ETF, Space and Defense. Well, let's look at the black line. S&P 500 up 7.8% as I'm recording this, and the two funds in the ARK group are up 15, almost 16%, and one is the Space and Defense Innovation ETF, and the other one is the Autonomous Technology and Robotics ETF. Now remember, what are our tech stocks doing? The top stocks in the XLK up 30.6%. So her, and I'm talking about Kathy Woods again, her ARK funds that are outperforming the S&P this year are up only half as much as our top stocks in the tech ETF itself. So when we look at this chart again, we can see that those technology type funds that invest in the smaller stocks that may be the big stocks of tomorrow, there's just too many of those small stocks that aren't doing so well, and they're holding the whole fund back. And of course there are more than one, so it's very, very difficult picking those small stocks, which ones will become big. And you only hear on TV or on the internet about the several stocks that are returning 1,000% from a newsletter that picked them 10 years ago or something to that, but they don't tell you about all those losers that return 0% over all that time. And that's the point that I'm trying to bring out. You want to pick out the best stocks, or look at us picking out the best stocks in a ETF that is performing pretty well over the years. So we take the best ETFs and then we pick the best stocks, or what we feel are the best stocks, using the clean surplus methodology in those ETFs. So folks, we had another good week, and I never get tired of saying that. We had another good week in the market, new records again this week. And so just go out, enjoy yourself, take your mind off the market, take a walk on the beach, take a walk around the golf course, or just down the street, wherever you live. Get out there, be with your loved ones. Most of all, stay safe, stay healthy, and we'll see you back here in a couple of days.